free or concessional tickets, as we have paused. We'll start from there. The value of any benefit amenity resulting from the provision by an employer. Suppose employer is engaged in the business of passenger or goods, carriage of passenger or goods, and he is giving us free may, yeah, concessional rate pay. He is giving us the value of conveyance. Then what will be the value of perquisite? Value of perquisite such he is charging from other public as from to the public as reduced by the amount, if any, recovered by the employee. However, there will be no perquisite in case of airline or railways. Employees of airlines or railways. Value of other fringe benefits or amenities, in that interest free or concessional loans, this we have already discussed. Interest free and concessional loans, traveling, touring and accommodation. For touring, traveling and accommodation, how much ever expenses is incurred will be the value of perquisite. Suppose it is not incurred, suppose it is maintained by the employer and not given to all the employees uniformly, then such facilities are offered by other agencies to the public will be the value of perquisites. Now, expenses of any member of household accompanying such employee on office tour, expenses incurred by the employer will be the perquisite. If official tour is extended as vacation, expenses incurred in relation to such extended period of stay. Free or concessional food and non-alcoholic beverages. The value of free food or non-alcoholic beverages provided by the employer to an employee shall be the amount of expenditure incurred by such employer minus any amount received from the employee. What will be not treated as perquisite if received during working hours or through paid vouchers which are not transferable and usable at only eating joints, and it will not be taxable to the extent of 50 rupees per meal. Tea or snacks provided during working hours, free food and all beverages during working hours provided in remote area and offshore locations. So, during working hours is given and through paid vouchers is given. To the extent it is not exceeding 50 rupees per meal, then it will be exempt. Value of gift, voucher or token in lieu of such gift. Value of any gift. Exemption of free food and non-alcoholic beverages provided by employer through paid voucher would not be available in case of employees pays tax under default tax regime. So it is available only in case of whole tax regime. Value of gift, voucher or token in lieu of such gift. The value of any gift or voucher or token in lieu of such gift may be received by employee or member of his household on ceremonial occasions from the employer shall be determined at the sum equal to amount of such gifts. If the value of such gifts is below 5,000, the value of perquisite shall be taken as nil. On all the credit card expenses, if reimbursed by the employer, shall be taken as value of perquisite as reduced by the amount, if any, paid by the employee. For such exemption, complete details in respect of expenditure should be maintained by the employer, including date and nature of expenditure. An employer should give a certificate for such expenditure. For club expenditure, actual amount of expenditure incurred or reimbursed by the employer will be taken as value of perquisites minus any benefit, any amount paid by the employee. And now, for example, employer has taken the corporate membership of the club, and now employee is enjoying the facility or any member of the household is enjoying the facility, then value of perquisite shall not include this initial fees of corporate membership, because the employer has become a corporate membership because of his own purpose. If it is for wholly business purposes, it will not be treated as perquisite if complete details of expenditure, including date of expenditure and nature of expenditure, is kept, and employer gives a certificate that same was incurred and wholly exclusively for performance of official duties. There would no perquisite for use of health club, sports or similar facilities provided uniformly to all employees by the employer. Use of mobile assets and transfer of mobile assets is already done. Other benefit, value of other benefit service provided by the employer shall be determined on the basis of cost to the employer under arm's length transaction as reduced by employee's contribution, if any. However, there will be no taxable perquisite in respect to expenses on telephone, signal, and mobile phone actually incurred on behalf of employee by the employer. If an employer pays or reimburses telephone bills or mobile phone charges employee, there will be no taxable perquisites. So, in case of mobile or telephone charges, value will be nil. Valuation of a specified security not being an equity share in a company for purpose of section 17(2)(6). What is 17(2)(6)? Okay, sweat equity shares. We have already seen sweat equity shares. Suppose if it is a security other than equity share, then the fair market value of such security on the date of exercise of option shall be the value determined by the merchant banker on the specified date. Specified date is date of exercising the option or any previous date, but such previous date should not be more than 180 days. Tax on specified securities and sweat equity shares is required to be paid in the year of exercising of option. However, if such sweat equity shares are allotted by the employee who is eligible started, the perquisite is taxable in the year after the expiry of 48 months from the end of relevant assessment year, in which sale of such security or share are made by the assessee, and thus this ceases to be the employee of the employer, whichever is earlier. For the purpose of perquisite rules, who is a member of the household? Spouse, children, parents, servants and dependents. Spouse, children and their spouses, parents, servants and dependents. Salary. For purpose of perquisite, salary includes and what it does not include: DA, employer contribution to PF, allowances exempt, value of perquisites, payment specifically excluded from lump sum payments received at time of termination of employment. Deductions from salary. Now, income chargeable on salary is computed after making the following deductions. One is standard deduction, one is entertainment allowance, and another one is professional tax. 16 IA, 16 1A, 16(2), 16(3). C. Standard deduction is up to 50,000 if excise the option of shifting out of old tax, and 75,000 if new tax. Entertainment allowance to government employees if the exercise option of shifting out of the default tax, that is old tax. Professional tax paid if the exercise the option of shifting out of default tax, that is old tax. If he opts for old tax, then professional tax can be subtracted. Entertainment allowance to government employees can be subtracted. Net taxable income. Entertainment allowance received is fully taxable and is first to be included in salary, and thereafter following deduction is to be made from gross salary. First is included in the salary, and later it is deducted. The amount of and it is available for government employees only. 1/5 of basic salary 5,000 or amount received. Lower of these will be the deduction amount actually spent by the employee towards entertainment allowance after the entertainment allowance received by him is not a relevant consideration at all. So entertainment allowance, when we can receive, only if we exercise the option of shifting out of the new tax regime, otherwise this will not be available. Professional tax on employment, again it will be available only for old tax regime. Professional tax is reimbursed and directly paid by the employer on behalf of the employee. The amounts of paid first is included as salary income and then allowed as deduction under section 16. Professional tax is a tax on employment and is allowed as deduction only if it is paid by the employee during the previous year. Okay. The total amount by way of professional tax payable in respect of any person shall not exceed 2,500 per annum. However, amount paid previous year can be more than 2,500 as the employee may have paid professional tax of an earlier year during the previous year. See, it should not be more than 2,500. If he is paying of the previous year during this current previous year, then it can be more than 2,500. Relief under section 89. Suppose we are receiving arrears of salary. When we are receiving arrears of salary, we are receiving from the year in which there was a different tax rate, and during this year when we are actually charging to tax, it will be a different tax rate. So how to calculate it? The income is assessed at rate higher than that which it is otherwise have to been assessed. The assessing officer shall, on application made to him, grant such relief. Okay. Similar tax relief extended to the assessee who receives arrears of family pension. Family pension receives means regular monthly amount payable by the employer to a person belonging to a family of employee in event of his death. No relief at the time of voluntary retirement or termination of service. If exemption under section 10 cc is taken, then section 89 benefit will not come. Now how do you calculate section 89 relief? There is a method. Calculate tax payable of the previous year in which arrears add-on is received by considering total income inclusive of additional salary, total income exclusive of additional salary. So we have to calculate two taxes. See, in the previous year when we are receiving arrears of salary or advance salary, we take the total income inclusive of additional salary. Take total जो salary extra मिला है that also you take in the total, and total income exclusive of the additional salary. Compute the difference of the tax calculated in step 1 and step 2. This is A minus B. Now calculate the tax payable of every previous year to which additional salary relates on total income including additional salary of that particular previous year. So total income including additional salary, what would have been the tax, and total income excluding additional salary, what would have been the tax. Calculate difference between A and minus B in the step 3 for every previous year to which additional salary relates and aggregate the same. Relief under section 89(1) will be amount calculated in step 2 minus amount calculated in step 4. So we will take total income inclusive of salary, total income exclusive of additional salary, difference of tax. We will calculate tax on this and difference of tax will be taken in the step 2. Again, total income of the previous year we should take, add the additional salary. Total income excluding the additional salary we should take the tax. The difference between these two should be taken. Subtract this with the step 2. Step 2 minus step 4, we will get relief under section 89(1). So this is with relation to salaries. Any annual accretion to the balance of credit of RPF or approved superannuation fund which relates to employee contribution on account say having exceeded 7,50,000 will be included in the value of perquisites. What will happen on the interest annual accretion by way of interest, dividend or any other amount, similar amount nature related to the credit of RPF superannuation fund relates to employee account which is included in total income will be computed in the prescribed manner. So what will be the formula? Taxable perquisite will be PC by 2 into R. Amount of aggregate employee contribution in excess of 7,50,000 divided by 2 into R plus amount of aggregate amount of employees contribution in excess of 7,50,000 to RPF National Pension Scheme under section 80(60) and approved superannuation for the previous year or years commencing on or after 1st April 2022 other than current previous year. So PC is during the current previous year, PC1 is other than the current previous year. TP1 aggregate of taxable perquisite for the previous years or years commencing on or after 1st April 2022 other than current previous year into R. So this will be the value of taxable perquisite.